Hey, what's up guys, welcome back. Today I'll be discussing with you the subject of one of your favorite words that you use every day, and it's called interest. So that will be in the perspective of banking, finance and insurance. So before we do that, I just want to give it to you as a background that I am a corporate banker, been in banking for 10 years, and together with finance, it's been 18 years going 19. So what I'll basically be sharing with you here will be from experience and professional knowledge, so that you can have the benefit of knowing what you've always wanted to know. So with that, let's dive right in. All right, number one is called interest paid. Interest paid is number one, and two is called interest received. Okay, for the sake of definition, interest is basically rent for your money that you leave with the banks if you are what is called a depositor. Right, you're depositing your money in the bank, and the banks pay you a form of interest, which is called interest paid or interest received. All right, so it's basically in the between the banks versus you, the most important person called the customer. All right, so you deposit your money in the bank, and then the banks pay you an interest. All right, interest to the bank, when they pay you, it's an expense to them. So when they pay you, they will call it interest paid. But that same interest, you are handing it, you are receiving it. So to you, the customer, you will call it interest received, but it's the same payment. So it's just in the way of where you sit at the end of that transaction that matters. Okay, so you either receive an interest or you're paying an interest. All right, so from experience, banks normally pay between 0.1% to less than 3% per annum. Okay, annually they pay you that interest. All right, so it's not much in a sense. So say if you deposit 100 kina, and the banks are charged at 2% to keep your money, they will pay you 2 kina. All right, banks will pay you 2 kina for the 100 kina that you deposit at 2%. That is interest received. All right, now the banks will take that same 100 kina, they will do what is called lending. All right, the banks will lend, they will loan that money to credit-worthy customers. All right, so the credit-worthy customer, having taken out that loan, will be charged by the bank at say 30% or more. All right, so if the borrower borrows that 100 kina which you have deposited, the bank will take that 100 kina, give it to the customer. They will charge it at 30%, which now becomes a 30 kina they will hand from that 100 kina they are lending. So they are making a 28 kina from your money. So 30 kina less the 2 kina that they are paying you, they are making a 28 kina. All right, this is 100 times more than what you're getting for your money. All right, now you will argue with me that why are the banks paying more than what we are receiving, or why is the bank making more money than what they're paying us? All right, let me answer that for you now. All right, banks are simply what I call insurance companies. Okay, banks are insurance company, and their business is to sell money to make money. All right, whether you like it or not, you can argue all day long. All right, banks, they sell money to make money. So They're lending your money, which you deposit, to make their money, right? So now there is a big gap between the interests that we are receiving versus the interest that we are paying to the banks, in terms of the fees, in terms of the rates that banks are getting our money, lending it to the customers, and they are making from our money. So we're not even operating in the even playing field. So that's basically that. I hope this has been of some education to you, so you can understand the difference between interest paid and interest received. So you as a depositor will have to make better choices if you're looking at earning some form of interest, making money from your money in the banking systems. You have to do a little bit of education, study the banks that you're banking, and then what kind of interest bearing deposits that they have or products in the bank, so that you can be able to make a little bit of margin for your money. So with that, thank you very much. I hope this has been helpful to you, and I'll see you all in the next one.